From Ticker News, this is Ticker Today.
Oil prices have surged to a 7-month high and gold soared past $5,000 as escalating tensions between the US and Iran raised concerns over global oil supply disruptions. For more, I'm joined in the studio, Rodda, Capital.com. Good to see you.
Hello.
All eyes at the moment on the Middle East, the massive US build-up, and that obviously is raising fears, people heading to safe havens.
Yeah, I mean, obviously the oil price is going to be the barometer here because there's a concern of a pretty significant conflict, maybe one that sort of becomes quite regional, and that will devolve into supply shocks, which will, be a very, very significant change in the fundamental dynamics in the energy market. So we're basically waiting and watching to see whether Trump pulls the trigger. Over the last few weeks, there has been that military build-up, maybe similar to what we saw in, Venezuela or, the north of South America at the start of January. And it's not for me to speculate as to what he will do or not do, but if something happens, it's going to be fairly consequential for not just the energy market and safe havens as well, but global financial markets too.
The idea is probably they want some sort of clean strike similar to Venezuela, where it's in and out and done. But that came as somewhat as a surprise. Obviously, in the case of Iran, it's very different. They've been expecting something. Iran has a huge military build-up themselves. This could get messy and therefore, as you say, spill into things like the price of oil.
Yeah, again, probably outside my wheelhouse a little bit, but sort of a smash and grab of the Ayatollah or something like that is probably quite unlikely, I would imagine. What the US would probably be wanting to achieve here is that if it is going to perform some kind of strike, that it's going to be on fairly key infrastructure and something that probably destabilises the regime as well. So once again, the concern here for the markets, and I can speak about it a little bit more confidently, of course, is that Iran has leverage when it comes to energy infrastructure and could potentially blockade, for example, the Strait of Hormuz. If that were to happen, markets would react quite violently again, because this is a significant conflict with implications for the energy market and risk sentiment, but also interest rates around the world too, because it would be potentially an inflationary shock.
Oh, very much so. I mean, we saw it with what happened in the Middle East and before that in Russia, Ukraine as well. What about gold? Obviously, it's been hovering around that 5,000 mark, going up and down. What do you think the impacts could be on gold?
I would suspect gold will rally in such a situation. I think what's happened over the last 3 weeks is that the dislocation in precious metal markets have continued since the big sort of mini bubble that we saw in January and then subsequent collapse over the last 3 weeks. And I mean, if you do look at the price action in both gold and especially silver, neither are behaving in a very efficient fashion at the moment. 5% moves in a day for silver, 2 or 3% moves a day for gold is not a healthy market, even though it's exciting for speculators. But if we do get this kind of flare up in geopolitical tensions, and obviously the questions will be of the second and third order effects of Iran's allies, not so much that they'll become intervened or embroiled in the conflict, but to what extent will that fray diplomatic tensions, foreign policy issues and trade potentially as well. That's all going to lead to a stronger bull case for gold once again. And this perhaps theme of de-dollarization, that adversaries obviously have become a little bit wary of the US's foreign and trade policy. This would, of course, amongst adversaries, only inflame things further and reduce the appeal of US assets relative to gold, for example.
All right, let's talk about the week markets. The Dow dropping towards the end of the week. What's the reason behind this?
It's a little bit of speculation about inflation, a little bit of speculation about AI disruption and things of that nature. The Dow, for example, is holding up a little bit better. It's still around that sort of 50,000 mark. And what we have seen throughout this year, and especially the last month or so, is this rotation from tech into cyclical names that in principle should benefit from resilient growth. And we have seen the US economy much more resilient, the global economy much more resilient too. But also this prospect that interest rates will still come in the United States, partly by virtue of some inflation data that we got last week that was a bit better than expected. What will be interesting though is we've got the Fed's chosen inflation gauge to be published at the back end of the week or in the final session of the week, and that will kind of test to what extent the Fed will still be comfortable in lowering interest rates and still has the capacity to provide at the margins a little bit more stimulus to the economy and boost things like the Dow and even probably tech stocks too. So it's a kind of a bifurcated market, especially in Wall Street, because we are seeing the kind of flip side of last year's trade, which is weak economically growth, weak sectors sensitive to economic growth being a little bit weaker, and tech stocks, being a little bit stronger. That was the trade last year. It's reversed. But if we get some sort of positive inflation breakthroughs and expectations of rate cuts, that might provide a little bit of a basis under the market to push higher from here.
Yeah, very interesting. Obviously, in India, we've seen this tech conference, AI tech conference happening. Sam Altman has been speaking and talking about the idea of generative AI and general intelligence AI being around in its early forms as early as 2028, so a couple of years away. The impact that this could have on tech stocks, do you think, given what we've seen with Claude and Anthropic over the past few weeks, as everyone is slowly but surely getting closer towards, I guess, the idea of general intelligence AI and the impacts that could have on society?
Yeah, I mean, I think the sort of tech leadership in the United States have been talking quite prolifically over the last few weeks about the disruption that is going to happen because of AI, and there was the Claude developments, for example, and then I can't remember the CEO of which, might have been Microsoft, but basically talking that in the next 12 to 18 months or so, a lot of white collar work will be made more or less redundant, and potentially that's being backed up in the data, because we've been getting jobs data out of the States for the last couple of months, the NFPs, and you're pretty much seeing that white collar employment is stagnating, and there's the argument that it's not being necessarily replaced by AI, but companies are investing in the capital necessary to kind of build that capacity. In the meantime, they're not hiring those jobs, on the view that eventually they won't need to replace people.
Yeah. But a lot of companies are kind of stuck at the moment, right? They probably do have roles they need to fill, but they don't want to fill them only to have to make people redundant if generative AI, general intelligence, I keep making the mistake, if general intelligence AI does come on board.
Yeah, and there's this kind of sense that it kind of, filters upwards. So I've spoken to a lot of people in the States in particular who are saying that they're reluctant to hire new grads, for example, because mostly grads are an expense, more or less.
It's training cost.
There's training costs. They've got no skills. You still pay them not that much, but still more than they can generate in value. So they're holding off on grads, and that is expected that maybe that will continue to move up, the corporate hierarchy until it's replacing middle management and all of those sorts of things too. So
isn't that terrifying when you think about it, right? The next generation of workers we aren't talking about. The next generation of workers, so many businesses are hoping will be general intelligence AI or AI in general. And that will have profound impacts, as we know, on society and on the next generation as well, and universities and education.
Well, yeah, I mean, there's the argument that one tail risk for artificial intelligence is that governments have to intervene because people are frustrated at the backlash, maybe directly from losing jobs, indirectly because of inflation and higher electricity costs, all of these things.
Well, that's what Sam Altman was actually talking about, suggesting that there needs to be some sort of international agency overseeing AI, similar to the International Atomic Energy Agency, because the impacts of this AI move right around the world could be as significant as nuclear there as well. It's a fascinating topic. So when we talk about what's been happening on the markets, NASDAQ stocks and Dow, have they been in line, or has there been a bit of a difference, and why is that the case?
There's a divergence, and I think everything that we've just been speaking about can be distilled in this kind of narrative shift where AI last year was treated as an opportunity, something for growth and productivity and prosperity. Now it's considered something of threat, disruption, and in particular, people are fearful from just an investment point of view of certain businesses being so disrupted that they become effectively obsolete. And as a result, there's this kind of psychological shift where you go from FOMO to one where you're just trying to avoid picking losers. You don't want to be investing in a company that on paper looks good, but in 3 weeks' time is going to be disrupted by an AI model.
Describe that type of company at the moment. What would investors be looking at if they're looking at a company that may be disrupted?
Software is the big one, obviously, at the moment, and that's obviously going back to the Claude, sort of developments over the last few weeks. But we're seeing pockets of it everywhere. And again, there's this element of kind of shoot first, ask questions later, where there was Insurify a few weeks ago disrupting the insurance landscape. Some developments in wealth management that saw Charles Schwab and brokers sort of selling off. And some of these stories are quite substantial, like with Claude. It's a really fantastic technology. Other times it's just a headline and everyone goes again.
Which is a really good point. I mean, there feels like there is a common sense missing here. And I talk about this from someone who uses AI all the time in personal life and at work. Here's a question for you. If you were to be booking a holiday to Europe, would you feel comfortable putting that into Claude and just going with whatever it buys for you?
Maybe not whatever it buys for me, but one thing that I have noticed with my own travels, for example, is that if I'll give you an anecdote, on a train between Paris and Zurich, and I don't know how I'm necessarily going to get back home to London, which I need to be on Monday, pumping that into ChatGPT, giving me an itinerary, and all of a sudden I can see what it's planned for me in the space of 30 seconds rather than doing the work for me. That's disruptive. So,
but there's not a business that's impacting. My point about what Claude did to Booking.com, for example, is it terrified investors in Booking.com that you would be able to do all of that through Claude. But right now, people do not have the trust or the faith in AI. So what investors are thinking about and what is publicly happening seems to be quite different.
So I think there's two things there. First is, the investors are always thinking about the future and how it could impact future cash flows. So if they say, okay, this is happening now, if this continues to evolve, this is going to be the disruption, we have to discount that in the future. The other thing too is that it's a kind of, what you'd call in behavioural economics perhaps a Keynesian beauty contest, which is you're not anticipating necessarily what will happen to the company and what is fundamentally going to occur to the company. You're trying to anticipate what your other person in the market is going to do with this particular information. And if you're of the belief that they're going to be fearful enough to sell the stock before you do and you can't get out, you're going to look to try and preempt that. So it's basically, again, shoot first, ask questions later, and then digest the implications of this. It all goes to that psychological shift in the markets that, again, people with FOMO, worried about missing out on opportunities and buying stocks on that basis, front running, to now being more fearful about getting stuck in a loser or be the one holding the bag effectively of a loser. So when this news comes out, you get rid of it, you then assess the costs, and then you proceed accordingly.
It's interesting you talk about that. There's a story out today. Accenture tells senior staff to use AI tools or risk losing out on leadership promotions. Do you think over the next few years we're going to see a huge turnover of senior leadership who perhaps are seen as old school in companies and aren't able to, I guess, push on in a new AI world?
I think so, and mostly because we saw that during the internet age as well. And even, we were talking about this as recently as 5 to 10 years ago, that there was, a lot of board level leadership with digital illiteracy, and that meant that they weren't really capable of making good governance decisions. So that's basically inherently going to be the case. The flip side of that is that there is such a push amongst organisations to try and AI everything that there might be missteps along the way, and not even radical missteps, but just a misapplication of the technology that actually increases organisational risks because they don't apply it properly. And I know every day we're told more and more to try and use AI. Sometimes you sort of wonder, is this a little bit of excessive and using AI for the sake of using AI? So there's all these things that in the aggregate it will probably work itself out to be something that proves to be a very efficient technology and something that does maximise utility in the long run. But there'll be all these sorts of cases where people misuse it. There's harm costs sort of incurred, and certain businesses will not quite be the beneficiaries of the technology that many would be hoping for.
All right, hopefully we get to sit here and talk about it in the future as well. Appreciate your time. Rodda, capital.com.
Thanks.